Welcome to Mission to Inspire with Shola Ajibade, where inspiration, purpose, and abundance come alive. Together, we'll empower lasting change, helping you step boldly into your greatest potential. Hi, everyone. Welcome to Mission to Inspire. My name is Shola, and I'm joined here today by Steve. Hi, Steve. How are you?
Hi, Shola. I'm fine. Thank you.
He's actually an experienced investment manager, financial advisor, and he's the author of Retirement Money Secrets. So I'm going to leave it as that. The internet today isn't as open and simple as it used to be. Some content is blocked by location. Websites are constantly tracking your every move, and managing multiple accounts often leads to bans or restrictions, and that's where GoLogin comes in. So let me show you why it stands out. Unrestricted access, that's what it gives you. Real online privacy, multiple account management, seamless team collaboration, and you also have the invisible to trackers. And lastly, you get this 2 GB of free residential proxy. Let me quickly show you how to get started. Number one, head over to gologin.com and click on download. Sign up and launch the app. Create a new browser profile and choose your settings. Use the built-in residential proxies for global browsing. Start browsing with full control. Click on the link in the description below to try GoLogin. Okay. All right. Okay. So thank you for that. Thank you for introducing yourself there. Your approach to investing is quite unique in itself, and in that it actually prioritizes income over market value, just like you said, returns. Can you walk us through why income-focused investment is a more reliable strategy, especially for those in nearing retirement?
Well, it certainly is because, as you know, when you get to retirement, you're losing your job, and depending on what you've accumulated and what benefits you have, you may or may not be getting enough from pensions and other programs, um, to maintain your lifestyle. And for a lot of people, that can be kind of overwhelming if they don't have enough money to live the way they had been living before they retired. When you have market value, let's throw out a number. Let's say you have $1 million, and it's invested in things that don't pay a lot of income. Say there's just 3% income being produced, and in the U.S., that's a little bit. That's about the high of what most portfolios I look at generate in income, because most people focus so much on the stock market and looking at market value. That's what's emphasized here, that they don't spend the time to look into the possibilities for growing income from their portfolio. Instead, they're hoping that the market will always rise, and then they'll just sell part of it to take care of their fundamental needs and any other vacation or healthcare, whatever they need. And sometimes that doesn't work out so well. When there have been so many major crashes in the past 60 years, and we never know when that's going to happen.
That's very true.
So instead of the idea of chasing that market value, my emphasis is on saying, hey, tell your investment advisor that you want income now and you want to grow that income so it totally replaces your employment income. So it's like you're walking out of one door and into another one. And the only thing that's changed is you're no longer working for somebody else. You still have the same amount of money coming in, and getting people to think about it. Think about doing that is not as difficult as it is encouraging or finding an advisor that'll actually do it for you.
Yes.
Because they're not really focused in that area. Because generating income and using the types of securities that do that just don't go up in market value as much as things like the stock market. Like, for example, just yesterday in the US, it was like a record stock market day. Everything was up.
Yeah.
Um, but no matter all that money those people made,
Mhm.
unless they take those profits, it really doesn't produce any income unless
Mm,
they actually realize those profits. So in my structure, in my approach to doing things, as things go up, I take those profits, and that's like new capital. A profit is something you didn't have yesterday. It's now a new piece of capital that you can invest, and that creates more income if you invest it in income focused security. So that's the distinction. It's understanding, yeah, the market's going to go up or down. When it goes
mm,
up, you have to take those profits
yeah.
and invest them in things that produce income.
Hmm.
And so when it goes down, you're still generating the same amount of income. Nothing changes when the market goes down, in the area of how much interest a bond pays or how much dividends a stock pays. It stays the same.
Right.
So
Right.
that's the distinction that you're
That
you're
is
looking at.
good.
You're trying to fill your wallet up with cash
Mhm.
instead of filling your ego up with pride of how much you're worth, you know.
Right, right, right. I get you. You mentioned that market corrections and rising interest rates actually benefits your approach to income generation. Yeah, in your book. How can investors turn what many see as risk as factors into advantage for growing income?
Well, the risk factors are many. You
Mm,
have to make sure you're looking at high quality companies or high quality investment vehicles.
mhm,
You have to diversify properly so that you
yeah,
don't have too much money in any one thing.
mhm,
I mentioned the importance of income. You have to make sure everything you invest in is producing some kind of income.
right, okay.
And then the final way of minimizing the risk involved with investing
Mm,
is to be aware of profits and to take them, to have a target. It's
yeah.
just like, you go to a store
Mhm,
and or you go to the market, you know,
yeah,
and you go up to somebody that's a vendor there and they have products to sell
yeah.
and you tell them how much you're going to pay or they tell
Mhm.
you how much they want,
One, yeah,
depending whether it's a store inside or outside in the marketplace, and then you come up with a reasonable decision so that everybody gets what they want. Well,
yeah,
that's what your investment portfolio becomes when
right,
you when you know you have a whole collection of high quality products on your shelves, high quality investments in your portfolio.
yeah,
You set a
yeah,
target profit for it, and when
mm,
you can get that target, you sell it, and you have a whole universe of other securities that you can invest in of the same type,
right,
not exactly the same, but the same
mm,
class, the same income orientation.
yeah,
And you just pick another one, you put it there on your shelves, and you wait until somebody shows up that wants to pay you your profit margin.
right.
So in the simplest terms, you think of your portfolio like a department store.
Like a department store.
Like a
Wow.
department store with all these things on your shelves that you're willing to pay. They're they're sitting there, and in this case, they're sitting there giving you income. Like in the case of closed-end funds, which I use, right now they're paying between 9 and 10%,
Okay,
and
it's quite good.
you can sell them. You can sell them for another 4 or 5%. Well, geez, that's not a bad take. And then
No.
you put them into something else that's similar, not the same thing again, but putting in another thing that's paying about the same, and you
Mm,
just do that over and over again.
mm, mm.
Like yesterday when we had that record day in the market, I must have sold, I took profits on maybe 20, 25 different securities.
Right, great.
Today was a little lighter. I only took about
Mhm,
15, but
mhm.
but at the same time, as I'm doing that, there are still opportunities to buy things that are yielding 9 and 10%. So I was plowing the money back in to
Mm,
other things that I didn't just
yeah,
sell.
yeah, yeah.
So that's the
Yeah.
technique. That's the process. It's changing the mindset from um, to be focused on the income. There's two ways to make money in investing.
Mhm.
One is dividends and interest,
Yeah.
okay, and the other is by taking profits. And it's the same if, so let's say you were talking about real estate and you had a whole bunch of apartments
Mhm.
paying you rent,
Yeah.
apartment people
Yeah.
paying you rent.
Mm.
But if the prices were going up in the community, or somebody came up to you and said, "Hey, I want to buy your apartment complex from you, and I'm going to give you this much money," and it's
Mm.
a big profit,
Yeah.
then you'd also be interested in doing that, and then you could buy another apartment building to get your rents going again.
Mm.
But you don't. Oh, in the U.S., and I don't know if it's the same focus here, but the it's like they're hypnotized by this idea of market value going up, and they just don't want to take their profits. I don't know if it's the tax code, which really doesn't favor
Mhm.
profit taking so much. It kind of
Yeah.
smacks you alongside the head and says, we're
Mhm.
going to take 30% of that or 25% of that.
Yeah.
If it's short term,
Mm.
you get a break if it's long term, but
Mm.
we're going to treat short term just like it was more income that you made from your employment. So
Mm.
they kind of hit you hard.
Mm.
But
Mm.
even so, it's like profits shouldn't be the thing that tells you what to do. If your employer at the end of the year was very happy with you and came up to you and said, "Hey, I'm going to give you a $50,000 bonus," you're not going to say, "No, thank you. I don't want to pay the taxes." You're going to take the money, and if you have to pay taxes, you pay the taxes.
Baby
But you're
taxes.
not going to say no.
Mm.
And most people are reluctant to take their profits either for the
Mm.
tax consequences, or they have this idea that this particular investment that they have is just going to continue to go up and up and up
Mm.
forever. And
Yeah.
then someday they're going to sell it and spend it. But when that's going to happen, they're still going to have to pay the taxes,
That's
or
true.
possibly, but in the meantime,
The internet today isn't as open and simple as it used to be. Some content is blocked by location. Websites are constantly tracking your every move, and managing multiple accounts often leads to bans or restrictions. And that's where GoLogin comes in. So let me show you why it stands out. Unrestricted access, that's what it gives you. Real online privacy, multiple account management, seamless team collaboration, and you also have the invisible to trackers. And lastly, you get this 2 GB of free residential proxy. Let me quickly show you how to get started. Number one, head over to gologin.com and click on download. Sign up and launch the app. Create a new browser profile and choose your settings. Use the built-in residential proxies for global browsing. Start browsing with full control. Click on the link in the description below to try GoLogin.
they're not getting any income. So in my mind, I like, I don't care about the
Mm.
hype of having these big numbers on
No.
market value. I want to see my income growing every year.
Yes.
Just like I was an employee,
Mm.
my boss came over and patted me on the back. He could pat me on the back as much as he wants to, but if he's not paying me any more money, I'm not going to be a happy camper, right?
That's true.
So
That's very true. That's very, very true. Your book, Retirement Money Secrets, it actually outlines the 6 fundamental principles for income independence. Can you share a couple of those principles with us?
yeah, the I think we've talked about the quality, diversification, income, and
Mhm.
profit taking. Those are really basics, fundamentals for any type of investing. Income focused. It applies more to income focused than not income focused,
Mhm.
to minimize risk. But the two other things that are involved that make up the other two principles
Yeah.
is the understanding of the markets. There are two major entities. There are stocks, equity type investing where you own you own a business indirectly by owning their shares,
Mm-hmm.
and the income focused area where you have actually are loaning money to businesses
Mm-hmm.
and they give you a bond back, and that this bond is a guarantee, or not a guarantee but a contract that they'll pay you money regularly and they won't stop, and they have to, and the bondholders or income um, focused investment holders get their money before the company can pay their shareholders, so they're a safer type investment. So what you have to understand is both of these entities are affected by forces, and the market the market itself is focused by economics, politics,
Mm-hmm.
health issues, you name it. I mean, just think about the last couple of years, with the COVID
Yeah.
and the dot-com bubble years ago, and the crisis, the COVID crisis all over, and that great recession we had back in 2008 and things like that. There's always something moving in the market. And then with the income side, there it's mostly it's mostly impacted by the direction of interest rates and where we think interest rates are going. And if they're going down, um, these things, interest rates are going down, these types of securities go up in price. And if interest rates are expected to go up, they go down in price. And the stock market and interest rates might be going in different directions at the same
Mm-hmm.
time.
Yeah. Yeah.
So knowing where you are in this cycle, you don't know where it's going to go next. You can't predict anything. But
Mm-hmm.
like right now, everybody should know they're at the absolute top, the highest the market has ever been in the history of human beings. It's never been as high as it is today. Right now, we are at the highest point ever in the stock market. So when prices are at their highest possible level in a department store, you're not going to go shopping there. They're not going to say, hey, prices are higher than they've ever been before. Come on in and shop.
Mm-hmm.
You're going to say, no, 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 no. We're going to wait for a sale, right?
Yeah.
Instead, you say, geez, I wish I had all that stuff. I'd be selling it at a big profit.
Mm-hmm.
So
Mm-hmm.
that's the thing. You got to know where you are in the market. Right now, you should be taking your profits in the stock market
You should be taking up.
without, there's no reason not to.
Right.
You don't know where it's going next,
That's true. We
and
don't
you
know.
don't want it to disappear. And actually, the bond market, the other side, the securities in that market aren't near their all-time high because interest rates are still way above where they were 5 years ago.
Right. Yeah.
Yeah, so they're higher than they were last year, certainly, but
Mm-hmm.
not nearly. So it's a very simple thing. Geez, I can take a 15-20% profit here,
Yeah.
and I can invest it over here in securities that are still paying 9 and 10%,
Mm-hmm. Mm-hmm. Mm-hmm.
And then when interest rates go down, those securities are going to go up,
Again, that's
y-
true.
you know. So that's the thing. You got to recognize that there is a market cycle. It's not going away. It's always
Mm.
going to be there.
It will
And
always be there.
knowing where you are in that cycle can tell you how to make your decisions. If you are going to buy stocks,
Yeah.
you don't buy as much of that stock as you would if it was lower. So
Mm.
you just take a little position
Mm.
because you know two things. If it continues to go up, I can take another profit.
That's true.
But if it goes down, I haven't overcommitted to this, so I can buy more of it when it's much lower.
That's very
And
true.
my average cost goes down. So
Mm. Mm.
so it's the same. That's very important to understand the cyclical nature of the market. And even within that, there are cycles in the various sectors: healthcare, energy, um, artificial intelligence.
Mm.
There's
Mm.
everything has their own little cycles as well.
That's true.
So and then the final one, and
Yeah.
this is the one that I focus on the most,
Mm-hmm.
is wrapping your head around the idea that income pays the bills, not market value.
Right.
And if I have I can have $1 million portfolio,
Mm-hmm.
but if I want to take a trip, to the United Kingdom from
Yeah.
here and pay the airfare and
Mm-hmm.
all the travel expenses and the hotels and
Yeah.
all the other stuff,
Mm-hmm.
just I can't just call somebody and say, "Hey, I've got $1 million. Can I go?" They say, "No, you got to give me money."
Yeah. That's
So
true.
you're going to have to either sell some of that or
Yeah.
it's going to produce the income to let you travel and live the way you want to.
Mm-hmm.
So
Okay.
getting that to that income focus is very, very important. And
Mm.
and when you translate that, when you
Yeah.
get as you really start to feel strongly about it, then
Mm-hmm.
you can tell your investment advice. You can do it yourself, if you learn how, and that book will show you how.
Okay.
Or you can buy a copy of that book for your advisor and say, "This is how I want you to manage my money so that it produces more money than I need to spend."
Wow. So that it
Now,
produces
so
more.
you, Mr. Advisor, you're a professional investor. You should know how to do that.
Yeah. Yeah. And that's very true. That it's very true. Thank you so, so much. One of the challenges many people face in balancing risk and income generation is the methodology that helps them to do
No,
it. So, how does your methodology help minimize risk?
well, we minimize risk, by those things we talked about:
Yes.
the quality, diversification, the income,
Mm,
and the profit taking. The profit taking minimizes risk because the higher the price of that security goes up, the more likely it is that other people, other professionals like myself, will start taking those profits,
mhm.
or the market goes down and the profits will disappear.
Again, right.
Yeah.
Mm,
And they do that all the time. I've had clients when I was running portfolios, and I know they had another portfolio, and I was trying to get them to let me manage it.
mm,
And every time the market go down, she'd talk to me and say, "Oh yeah, I've got to do that because it's always going up and down.
up
And
and down.
next time it goes up, I'm going to move it over to you so we can invest it for income." And
Mhm.
every time, no, no, it's going up. It's going to keep going up. I'm going to leave it right there, you know. And then next time she was crying, that went down again, I finally stopped trying. So,
Mm,
but that's the key issues. The key issues are those risk minimizers and then that focus.
yeah.
um, the type of security you use is, of course, very important too. I mean, there are securities you can use
Mm,
that are funds, and the closed-end funds are the oldest fund on the planet. They've been
wow.
around forever, and they're different from others because their focus is income generation.
Mm,
They must, unlike stocks, where they
mm.
can do whatever they want with their profits.
Yeah.
They might give the shareholders some. They'll give their executives a lot,
Right. Okay.
right? But most of it goes back into the business.
Into the
They'll buy more of something or branch out, start another thing here and there. So they're trying to grow the business, and that grows the price of their stock.
yeah.
And people are, most people like that kind of thing in their portfolios. Closed-end funds are investing in those same companies, those
Yeah.
very same companies that are making all this money and stuff.
Mm,
But since they're trust vehicles, they have to pay out 95% of their earnings.
wow.
So if they take profits or they collect dividends,
Mm,
um, they're giving it to me. I mean, and you, if you own closed-end funds, they're not just socking it away and buying
mm,
new anything. They have to give us 95% of it. So they're not going to go up in price.
mhm,
They're going to just make a lot of money and steadily pay us
mhm,
income every month, every month, every month.
mm.
Usually the same. Sometimes they go up, rarely they go down. This
Wow.
year, I think there's been over 50, maybe close to 60 increases in
Wow.
distributions,
Okay.
and only six reductions in the over 200 securities that I keep track of.
Mm. Wow.
So it's a
Wow.
safer environment, and
Mm.
and it takes care of all your expenses. And that's really what it's all about.
Wow, that is so interesting. That's interesting. Thank you so much for that.